Good morning, everybody, and this is your S&P 500 day trade setups for today. So we had some pretty shocking data come through yesterday. Not that it impacted the beginning part of the session, but there was a bit of a sell-off going into the close yesterday. So two things in play at the moment. One is bottom of range. So in other words, we've just come up and this whole week has just been one big range. So that is the first thing that we're looking at. And then the second thing that we're looking at is a potential double top. The double top scenario, I'm going to have to put another level for that. We would need to break and retest 43.75, and then you're looking at something down here. Just going to line up. And as usual, there isn't really any level further down. So this is the closest level we've got, and that's 43.42. So just to move through the time frames at the moment, I'm not 100% convinced that this means anything. We did get Amazon results come out after the bell yesterday, and earnings per share was up, but revenue was down a little bit. So I suppose the concern would be, is the stimulus wearing off? Is the economy starting to struggle? A lot of questions that people start asking about it. But reality is that this market is extremely overbought. So everybody's anticipating a pullback of sort, but we're not really seeing it. So it could just be a situation of people not willing to buy the breaks to the all-time highs at the moment. So let's get down to the hour. See if there's anything. For me, this is potentially an area to buy into. Look at our oscillators grouping quite nicely, bottom of range. So I'd be interested to watch and see what's transpiring here. This gap down at the moment does worry me a bit. So it's quite a big gap down. So end of month, end of week. That's the other thing you need to pay attention to today. So if the bulls get a hold of this at the moment, they are going to drive this down. And they're going to try and keep it moving sort of as far as they can, just to get a big red bar. Okay, so that's kind of what the strategy is for but I haven't told you what my strategy is, have I? But strategy for me is sit on hands. It's a little bit it's sideways. It's really, really, really difficult to jump in on something like this, especially when you've seen a sell-off going at the close. So if you look at the logic here, we printed a new high and then immediately proceeded to sell off. So we've moved off the high now. We've moved 390 points, 390 pips, 39 points on the index down, and that's substantial. That's a big move. So anyway, for me, this is sit on hands. This is sideways. I'm not really interested in this. It's going to end up as a red weekly bar at the moment, and I just want to clear all of those levels just to give you the one weekly level that we should be paying attention to, which is pretty much where we are now. So you can see we've had 2 weeks that closed in that area. Now it's coming back to test that. So if we stay above that, then there is an opportunity for a move up. But look at your oscillators as well. We're drifting lower here, so a bit of divergence on the weekly as well. So I think for me anyway, I would love to see a move down to trendline support at 4,000. That's kind of a structure that I would love to see. But obviously this area here would hold up price. So that's 42.50. Anyway, for me, sit on hands. We are flirting with a pretty big level at the moment. It's weekly resistance and weekly support. If you just come to the 4 hour, you'll see weekly support for this week, and it's a zone of resistance for the previous week. Okay, anyway, enough rambling from me. I'm sitting on hands. We'll wait for Monday before we start looking for any opportunities here. Hope it helps, and we'll catch you later. Cheers for now.